Ever thought complex strategies equal higher profits? Yeah, me too. I wasted years tangled up in mind-boggling methods, thinking that if I could just crack the code of all these technical indicators and multi-layered systems, I'd hit the jackpot. Here's the raw truth. Many traders drown in their own complexity and end up frustrated. I've been there. It's like trying to navigate a maze blindfolded. You feel smart. I'm strategizing, I'm doing my homework. But in reality, you're just chasing your own tail. Let me break it down with my own story. I was that trader, the one hopping on every shiny new strategy that promised untold riches. I had charts plastered with more indicators than a Christmas tree has ornaments. But guess what? Most months I was barely breaking even, feeling lost and more confused than ever. It took me a long time to realize that the serenity of simplicity breeds profitability. Last month, I made over $71,000 using what I consider a boring trading strategy. So simple it hardly seemed real. The genius of my boring approach? It's mechanical. It doesn't require daily bias. No fancy indicators, and it runs on minimal discretion. I don't have to wake up every morning battling my emotions. Is this the right setup? What's the news today? I simply follow my plan. The clearer it is, the sweeter the profits. Think about it. Emotional decisions can be the downfall of even the most prepared traders. When your heart races and that doubt creeps in, your judgment can go out the window. You start second-guessing every move, but with a boring mechanical strategy, you're following rules, not feelings. No more guessing games, just pure execution. Believe me, this is not boring in a bad way, it's liberating. Ready? What if I told you could win big while risking little? Sounds like a sales pitch, right? But here's the deal. Risk management is the real game changer in trading. I get it. You hear the buzz about high-risk trades leading to high rewards, but that's a trap. Just because someone swings for the fences doesn't mean they bring home a trophy. Trust me, I've been there. I used to chase those high-flying stocks thinking that the bigger the risk, the bigger the payday. Spoiler alert, I was wrong. Let me share a quick story. Early on in my trading journey, I put a huge chunk of capital into a tech stock everyone was raving about. I thought I was on the verge of a massive win. Guess what happened? I watched my account bleed money when that stock tanked. I realised I was betting on hope instead of strategy. But then I found a low-risk approach. Small trades, focusing on risk-reward ratios that made sense. Those trades, boring as they seemed, added up. I once turned a couple $100 into a few thousand in just a few weeks, while risking a fraction of what I used to throw around like confetti. So, here's where you need to take a moment. Think about your next trade. Are you inflating your risk because you're itching for a big win? Or are you playing it smart? By staying focused on low-risk strategies, you're building a foundation for sustainable growth. High-risk trading feels exciting, but it's a roller coaster ride with a lot of potential for loss. Controlling your risk means you're not just one bad trade away from crashing out. Profitability becomes a habit, not just a lucky break. The bottom line, sustainable profitability, is rooted in solid risk management. You want to stick around in this game, right? Then shift your mindset from chasing adrenaline to cultivating a responsible trading approach. All right, let's kick off Chapter 4, Key Setups that Pay Off. I'm pulling back the curtain on my top setups that actually work consistently. If you're like so many traders out there, you might feel overwhelmed by the sea of strategies and complicated indicators. Maybe you've tried dozens of methods, and each time you end up frustrated like you're chasing your tail. Sound familiar? The market can feel like a maze, but let me tell you, the path to consistent profits doesn't have to be complicated. Think of cooking. Sometimes the best dishes come from just a few key ingredients, rather than a metric ton of spices. In trading, those key ingredients are setups like the break and retest, the previous day, highs and lows, and order blocks. These foundational strategies are my bread and butter, and they can be yours too. Let's break this down. First up is the break and retest. This one is gold. Picture this. Price breaks through a key level, say a previous high, and then it tests that level again to confirm it holds. If this level holds, it can spark a continuation upwards. You want to see the market give you that clean break. That's your sign. Now think about how the price action behaves around those levels. If the price bursts through and then gives you a nice retest, that's your entry. You can set your stop just below that previous high to keep your risk minimal. It's like catching a wave. You wait for it to form and then you ride it. This approach allows for a low-risk entry point with the potential for solid reward. Next up, let's talk about the previous day, highs and lows. These are powerful levels that traders all over the market are watching. If the price hits the previous day low and bounces back up, that's a potential buy signal. If it breaks that level, you could be looking at a downtrend. But remember, you're not just praying for it to work out, you're managing your risk tightly. These levels aren't random, they're relevant and matter. They act as magnets for price action, and incorporating them can really boost your trading game. Finally, let's look at order blocks. Think of these as key supply and demand zones. In a downtrend, up-close candles can act as resistance. In an uptrend, the opposite is true. You mark these levels, and once the price approaches, you watch for signs of rejection. If it fails to break through that zone, you've got your entry. You're not just trading patterns, you're gauging market sentiment and making smart moves based on real price action. Now here's the kicker. Look at your trading routine. What setups are you ignoring right now? All the complex strategies you've learned pale in comparison to the power of these simple yet effective approaches. It's time to focus on setups that consistently pay off and leave the noise behind. Here's this month's breakdown of trades, the good, the bad, and the ugly. I've been trading for a while now, and trust me, it wasn't always smooth sailing. I've had my fair share of losing months and frustrating trades that make you question your sanity. But here's the deal. This month, it was a game changer. I managed to swing a tidy profit, and I want to pull back the curtain and show you exactly how I did it with my notion of a boring trading strategy. Let's dive into my trading diary. I started the month with around $142,000 in my account, and by the end of it, I was sitting at $213,000, netting a cool $71,000 for a solid 50% return. I rely on a simple, mechanical trading strategy that doesn't need me to overthink or apply flashy indicators. Think of it like following a recipe. Mix the right ingredients at the right times. It's neat, clean, and boy, does it work. This month's statistics show that my trade win percentage was around 66%, with solid days where I faced only a couple of losses. When it's green almost every day, it's like being on a winning streak at the casino, but you're the one dealing the cards. Here's a quick example of what I mean. My first trade netted me $12,000. It was a previous day low retest, alongside an opening range break and retest. The key here? I kept my risk tight. I was only risking about $1,800 to pull in that $12,000. That's a risk-to-reward ratio of 6.75. Enough to make anyone feel warm and fuzzy, right? So here's the takeaway. Being boring really pays off in trading. It means sticking to fundamentals, keeping my emotions in check, and not getting swayed by hype or fear. Here's my challenge for you. Don't just memorize strategies or patterns. See how they unfold in real time, understand why they play out the way they do. Watching live examples of these setups is crucial. It's not enough to know the theory, see them in action, track your own thought process, watch how the market reacts. And trust me, that's vital for your growth as a trader. Transitioning to a boring strategy isn't just about tactics, it's a mental shift. Many of us jump into trading chasing that high-risk excitement, that adrenaline rush of potential massive gains. But what happens when the thrill fades? You're left with a roller coaster of emotions, losing streaks and frustration that can make you want to throw in the towel. I've been there too. Trust me. I clawed through countless flashy strategies that promised the moon but led to a dead end. Now I know what you're thinking. Boring sounds safe, but what about those big wins? Let me challenge you to rethink that. Those high-risk trades that get your heart racing. often end in regret and loss. They're a trap. The stability of consistent gains is your new best friend. It's not about how flashy your strategy is, but whether it's sustainable over time. Subscribe to Trading Strategist, the new best trading channel on YouTube, and like this video. I'll see you in the next one. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.